Live. Hi, everyone, and welcome to our business success series, the very first session in our business success series. And we thought, as the supporters and maximizers of small businesses in Canada, we wanted to start all of us on the right foot on how to organize and how to set up our businesses to maximize for profit, for growth. So with me today, without further ado, with me today is the formidable and the most
Ah,
exciting Lisa Campbell. Hi,
wow,
Lisa.
thank you. Hi, thank you for that intro.
Yeah, for sure. Lisa and I have been chatting for a few months now, and I absolutely love the energy and the passion she brings to small businesses. And when I thought about this series for our small businesses, our customers, people who are looking into Fuse financial and see how they can benefit and how they can cut costs and save money, I couldn't think of a better person than Lisa to come on board and talk to us about her journey as a small business owner, as well as the support for the last 32 years that she has been pouring into small business community and into the small businesses that she has helped, and take us on a journey as a small business owner, or somebody that is just getting started as a small business owner, or somebody who's thinking about becoming a small business owner, how they can get started right off the bat with a proper support and tool and thought process to set themselves up for success. So, without further delays and me talking away, I want to ask Lisa to talk to me. And this has been the most passionate thing for me, is to learn from other small business owners and talk about their stories and help them talk about their stories as well. So, my very first question to you, Lisa. Well, first, I know that I've done a little bit, and I don't think I have done justice to your intro, right? So I would love for you to introduce yourself first and talk to me about how has it been as a small business owner for the last 32 years, as a bookkeeper, as a profit strategist for small businesses, and helping them be successful.
Wow, that's a lot. Okay, so all right, my name's Lisa Campbell, and I operate under a general brand called Lisa Campbell Profit Coach. And under that brand, I have three companies, and that's how I facilitate the way I help business owners. So the first company is my bookkeeping firm, which is now a profit strategy bookkeeping firm, meaning we're only going to work with clients who want to work on profitability strategy. So that's the one company, and that's direct to the entrepreneur, helping them. Then I have another company called the Successful Bookkeeper Global, which is where we work with bookkeepers and accountants, and we get them into more of a position where they're not focusing on just crunching out numbers. They're focusing on the story that those numbers tell, and actually helping their entrepreneur clients move ahead in their business. And then the third company under that brand is, of course, Profit First Professionals Canada, which is where we work with the elite bookkeepers, accountants, and business coaches to really create solid strategies following the profit first principles to get the business owners out of debt, into sustainability, and then eventually into wealth building. So that all stems from my own problems. So I've always been an entrepreneur since I was 21. I knew I could never work for anyone else. And my first career was actually, I was an esthetician. And I opened up a salon knowing nothing about business. I was a good esthetician, but I didn't know how to run a business. And of course, Anna, that a lot of business owners start that way. They're really good
Yes.
at running a restaurant, or they're a great
Yes.
hairstylist or something. And then they go into business. And then, of course, money is a huge problem. So having said all that, when I did have my salon, I was like 22 years old. I was super cheap, and I didn't want to pay a bookkeeper. I thought it was an expense, and I'll figure out how to do it myself, right? But then I learned that I really liked doing the money. I thought that was a lot of fun. So I started talking to a few of my clients that I was working on, and I was telling them what I was doing with my business, and they asked me if I could take over the books with their business. So I kind of developed this little side hustle, and I ended up selling the salon and went into the financial end of it full on. But it was still just part-time. I was raising my kids, stuff like that. But down the road, I got into a bad marriage with a man who was really, really bad with money. And then there was the dilemma. And then I got into crisis. And that's where everything flipped for me.
Wow.
Yeah.
What? I
So
did
I
not see
know the
that coming,
pain.
Lisa. I
I
did not
know
see
the
that
pain of a
coming.
business owner. It's crazy. It can be nasty sometimes, and it can be debilitating, and you're in tears. You don't know any way out, and there is a way out. Or let's just start it properly from the beginning.
For sure. I think this
Yeah.
is a story that we have all heard as small business owners. We have experienced, we have lived it. That, hey, I think if we could go back, this is the advice we would have given. Like, get started properly, set up your books properly, have a advisor, more of an advisor for your books than somebody that is just bookkeeping and just helping
Yes.
you with getting the numbers, keeping the numbers straight.
Yep.
And one of the other issue that businesses run into is getting financing, right? Like, it's a huge issue in Canada. Banks talk about, like, we don't have proper numbers. That's why we can't really help assess the risk properly, and that's why we can't help small businesses get loans. That is one of the biggest reasons why a lot of small businesses end up getting rejected, then working with
Yep.
someone, and then being successful in their loan journey or
Yep.
getting a small business loan. But your story is phenomenal, and I think a lot of people sort of get started this way, right? Like, I'm passionate about doing this, so I'm going to open a restaurant and this and that, and then
Yeah.
I will figure out the books later on, and then
Hmm.
somehow I will become profitable. And
Yeah.
so let's put that thought process into action right away, right? Let's
Yep.
become profitable first, right?
Yep.
And I think that is the philosophy that Profit First talks about.
Yes.
And I want to give you the space here to tell us, because I wasn't very aware of the Profit First strategy.
Yep.
So let me be very clear. I came in touch with this after speaking with Andrew, one of the
Right.
practitioners and person really passionate about it. And then you and I had a chat. So, what is Profit First for the people who are tuning in and have not come across the terminology, have not come across this methodology? So, what is Profit First?
Well, I'll get into the details of what it is, but like, first of all, it's a book. It's a book that I came across, and it's got some really good principles in there. The main one is about flipping that equation of sales minus expenses equals profit. We just flip it so that it's sales minus profit equals expenses. And I will get into that in more detail. And let me just be clear, we don't change your accounting. We still have to do accounting according to GAAP. It's a mindset thing. It's the way we move the money through the business. So I will get into all of that. But also, I want to just clarify as well, for anybody who's listening, who's in business already and is struggling with that and can't get financing and can't seem to find their way out, there is a way out. So it's Profit First can help you set your business up properly from the get-go. But what we do as Profit First professionals is create strategy to really help those people who are struggling. And I've seen some tremendous businesses turn around just with the proper guidance and the proper methodology. So do you want me to just go ahead?
Yeah, let's
Yeah.
let's introduce the book and the
Okay.
thought process around it.
Okay. So
And
the
yeah,
book is Profit First, written by Mike Michalowicz. So he is actually my partner because they are in global and I run Canada. Wonderful man, brilliant man, and his partner Ron Saharian. So we all work well together, creating a great learning environment and great support for our members who are in turn helping the entrepreneurs, because entrepreneurship is the backbone of our society. So let's do all that we can to help. But if we look at my story, I'm not going to take a lot of time on my story because it's really boring, but it probably very relatable to a lot of people. When I was running my bookkeeping business, my ex-husband, got away from that one. He thought, and I'm
for
sure a
all
lot
the
of
good
people,
reasons.
oh yeah, but many, many reasons. But like money, I was always pretty good with money, but then this happened and it was just so against my grain. It was
Yeah.
pretty nasty. But I'm sure a lot of people can relate. When you run a sole proprietorship, it seems like everything that comes into your bank account is viewed as your paycheck. And it's not. And that's what my ex thought. I worked with clients who think, oh, yeah, this money's in there. That's just my paycheck. That's not how it works. Because if you think of all the money that comes into your business account as your paycheck, you're not thinking about the sales taxes you're going to have to pay. You're not thinking about the income tax you're going to have to pay at the end of the year, which is exactly what happened to me. And so ultimately, we racked up over 6 figures worth of debt. And when I left him, I walked away with those 6 figures worth of debt. But this is what happened. I discovered this. I thought, I need to do something. I need to get a handle on the way this stuff is going on inside my business. And, it's just a book. It's just a simple book, but it really got me on a like momentum to learn how to tell my money where to go. And then I thought to myself, I really need to know more about this because most of my clients were struggling with cash flow.
Yeah.
So I got certified as a PFP. And then what I did is I introduced it to my clients that were in my bookkeeping business, and I implemented the strategies that I had learned to help them. And the beautiful thing is people are sometimes go, oh my God, that's amazing. And sometimes people go, I can't do that. I literally wiped out that 6 figures worth of debt within 2 years because I just
Wow.
followed basic principles. And it
Yeah.
sounds incredible. It sounds hard. It's not. If you just follow what you need to do and you have a plan in place, you can do it. It's super, super simple. And it's not a gimmick. Like, it's just a way of moving money around. So I also had incredible business growth as a result of that. I went in my bookkeeping business, I went from barely making 6 figures to doing multiple 6 figures within a year, simply by being able to show my clients how it works. Because what they did is they, of course, they refer other people, right?
Yeah.
It's like, this worked for me. So like, it just kind of took off and exploded. So now, for even greater reach, I train and certify those really great bookkeepers and accountants and business coaches to do exactly the same thing with their clients. Because let's face it, entrepreneurship is hard enough.
Yeah.
It's a lot of work. And cash flow issues, like I said earlier, can be debilitating. It's so depressing. You know, when you're taking from your personal line of credit and your spouse doesn't know about it, and it's just, oh my God, I can't get out of this hole. But my belief is there is no reason that any business should be struggling with
Yeah.
money when we have the tools. Like, we've got the strategy, you've got the tools of Fuse Financial, and we can show you how to manage it super, super easy. So what I recommend to people is always start with the book. Just do yourself a favor. If nothing else, go read the book. It's a great starting point. Get a handle on how the money moves through your business. Because I'm sure you can relate to this, Amna. Has anybody ever looked at their P&L and wondered why it says you made a profit, but you have no money in the bank and your credit cards are racked up? Like, I hear that all the time. Why do I have to pay taxes, right? The accountant calls you up at the end of the year and says, well, you have to pay taxes on this so-called profit at the bottom of your income statement. And you think, well,
Yeah.
that doesn't make any sense. There's no money in the bank, right? And that's very confusing for people. So profit first is about telling your money where to go so that you don't get caught by surprise. You're pre-planning everything. Every dollar that comes through your business has a job. And you, as the owner, it's your job to determine what that job is for each of those dollars. So our role as certified PFPs, like I said earlier, is to get you out of debt, if that's where you are, to get you sustainable, and then get you into wealth building, because it's business. You went into business for a reason. Let's make it happen, right? So how do we do that? We do it with strategy. Strategy is, we look at, where have you been? Where do you want to go? How do you get there? Setting up the bank accounts is the starting point. The strategy behind it is the sweet spot. And keeping those separate bank accounts in line with your strategy is how you get to your goal. And using the Fuse Financial platform fits in so beautifully with our strategy. This is why I'm so excited to work with you, because it's totally in sync, and it just makes it super easy for the business owner.
Yeah. So
So,
before you jump into this, Lisa, so as a small business owner, we are so overwhelmed with everything that we have to do, right? So even a little bit of change that is happening in our mental processes seems overwhelming and seems that it's a lot for us, and
yep.
we can't get into it right away, right?
Mm.
So I want to diffuse that by exploring your story, because for 2 years you didn't think like that. You didn't think the profit first way, right?
Right,
You
right.
thought you thought the traditional way of profit strategies, right?
Yep,
That, hey, at the end of the year, I have a profit line. Going to have to pay taxes on it, or
yep,
at the end of the year, I would know how much profit my business has made,
yep.
right? And then at the same time, I would see zero cash flow in the
Yeah.
account. So, what leads small businesses to think this way, right? The traditional way, or not the profit first way, and how can they switch that, or how can they flip that switch on very easily without having to do much?
Okay, so it's kind of like a catch-22. When you're in that position where you see profit on your income statement, but you don't have cash, there's a reason for that. And we can find that reason. And 9 times out of 10, it's because you've borrowed. The
Okay.
mentality is, I need to bring on more salespeople. I need to buy more product. I need a bigger warehouse. I need more storefront. So what do? We get financing for that.
Yeah.
And what happens is, when you look at the bottom line of your income statement, the money that you've paid back on that loan is not an expense. The interest
Yeah.
is, but it's not an expense. So let's say, just a very small example, you have a $10,000 profit on your income statement and you've got no money and you're totally in debt. You have to take into consideration, well, I spent 12,000 paying off the loan that I borrowed.
Yeah.
That's why you have no cash in the bank. So we
Yeah.
have to look at the balance sheet and the income statement, but it's not complicated. Then I can break out sort of what your expenses are and how you have to look at them. But it's a matter of going back to literal basics. Like Mike talks about the envelope system. You remember your grandmother used to, get her paycheck, she'd cash it, and she'd put an envelope for the groceries and an envelope for the kids and an envelope for the mortgage.
Yeah.
And she didn't move money from envelope to envelope. If it wasn't there, it wasn't there. So let's take the grocery money, for example.
Yeah.
If there wasn't much in there, you got beans and rice. If it was stacked full, you got meat. And it's the same way business owners need to think, that we live in a world of available credit. And if you're constantly building on credit and not balancing it out with the sales and keeping your expenses in line, you're going to run into trouble. So we go through processes, and it talks about it in the book as well, where we actually look at your expenses that you have inside your business. What are they all about? Do we really need them? Can we afford them? And I'm going to get into all of that.
Yeah.
But it's simple little things that I'm going to share with you that you can take and just break it down, look at your own business, no matter what level you're at, revenue wise, and just break it down and just flip it. It's just money you don't have. Therefore, you can't spend it. That's how you rein it in, and that's how you get paid, your taxes get paid, and all that stuff. Because my thing was, I got to go into my line of credit to pay my taxes because I spent it.
Yeah.
Right? And how do you get out of that? It's a constant cycle. Did I answer your question?
Yeah, no, definitely.
Okay.
I think it also, as I'm listening to you, I feel like this is the solution from the inside out to the small businesses complaining and talking about the lack of availability of credit. Now, let me say this, the credit is available to fuel the growth, right? When you have the growth opportunities and, there's a delay in how you're going to get profitable, you do need that cash injection. And we're not saying that it's not important for small businesses.
No, there's a time for loans. Absolutely.
Yeah. Well, we're saying that there's a sustainable way of growing. And by looking at and having this envelope system digitally available to you, you know how much money you have available to spend. And if you were to cross money from one envelope to the other, right? In case, right? Because if mortgage is very important to pay, for example, the grandmother might have taken money from the groceries envelope and put it into the mortgage envelope, right? Which means less money for groceries, which means you are on rice and beans, right? And that's what we're talking about. We're talking about a financial discipline that small business owners can adopt and sustain their growth, and then can apply for a loan and maximize their growth.
Yes. And just on that note, it's determining the important things. Like you said, mortgage is important. It has to be paid. It's determining what in your business is a must. We have to set the dollars aside for that. And then what can we do with what's left over? It's intentional, because what happens, and I'll get into it, operating expenses overrun everything. And to your point on financing is a wonderful tool. What you want to do is, when you look at your expenses that you have every month, can you afford to pay back that loan and still have a positive bottom line? If it's going to put you into the negative, there's a problem. So it's just a matter of looking at it, how you can use it, how you can service that debt, and what is that debt going to do for you?
That's fantastic. Okay, so the agenda for the webinar, how we had set up, is that a small business revenue is why you're in business, right? Your customers are buying from you. They see a value in the problem that you're solving, and revenue is basically the validation of your existence. So, right? So how? And one of the issues, or one of the things that we have talked about in the past, Lisa, is that small business owners, it takes them 56 days on average to get paid, right? They're not getting paid fast enough to have that money in their account to have those envelopes at the end of the month, right? Properly figured out. Right. So let's talk about, and if there's a better way of canvassing this conversation, let's do that. But I want to talk about how can small businesses manage their first money coming into their business, which is revenue. Right? Because profit growth, profit first formula that you talked about is revenue plus profit. Revenue
minus profit is equals expenses.
Yeah, sorry. Yeah. It usually is revenue minus expenses.
I know it's hard. It's hard to. I screw it up all the time.
So I'm like, okay, well, yes, let's flip the equation and let's do this properly. So it's revenue minus profit equal to expenses. Yep. So let's talk about revenue. what are some of the challenges that you have seen that are very common to small business owners, and how have you resolved them?
Okay, so I'm going to kind of flip it a little bit because
Okay.
everybody go, if you don't mind, because you and I had talked about sort of a format that, and
Yeah.
I got it kind of structured, and I'm going to answer all of your questions, just maybe not in the same order. So
Oh, Brent, no, that's perfectly fine.
the thing is that most business owners always focus on, I need more revenue. I need more revenue. Yes, revenue is the driving force. Like you said, it validates our existence. But what we have to do, and what we as PFPs do, is we look at controlling your expenses, because expenses overrun everything. So we talked about, I think we said we're going to master the art of controlling and optimizing your business
Yes.
expenses. So I think if we start with that, it's going to make
Okay.
the revenue, because your revenue is your revenue. If you don't have control of your expenses, you can't increase your revenue because you don't have the team, you don't have the support, you don't have the product. So let's get a handle on that first. And the
Okay.
way we do that, okay, is first and foremost your book. So you had mentioned earlier, your books are not just to file your taxes, that sort of thing. Everybody who's watching, listening, you just understand you have got to have access to your books. Whether you're doing them or your bookkeeper is doing them or your firm is doing whatever it is, you've got to see your books. You've got to understand the story that those numbers are telling you. They're not about an expense to justify your taxes. They are a crucial storyteller. So in order to get that story from your books, they have to be up to date. You can't just do them at the end of the year. You need them to make decisions. And it's not hard. And I know a lot of people find it very overwhelming. I hate accounting. I don't understand it. La, la, la. You work with the right person, you're going to understand it. You're going to understand the story that your numbers are telling you if they are up to date. Nobody cares about what happened last month except for analysis and projection. What matters is what's coming up. You've seen it, people run into trouble. They don't know what's happening tomorrow or next week. So here's the problem. This is where I sort of live. The bookkeeper is usually working on what happened last month. The accountant is dealing with what happened last year. And the biggest problem business owners have today is what is about to happen. That is my sweet spot. I love it. That's my zone. I love working in that area. So we do use your financial information, and you should use your financial information from your books to see, where have you been? But the important part is, where do you want to go? And then, of course, how do you get there?
Yeah.
So the first thing we look at, like I said, is your operating expenses. It is usually the biggest overspend with every single business I've ever worked with. OPEX seems to OPEX is my short term from the book for operating expenses. So if I say OPEX, I mean operating expenses. So it seems to supersede everything. Everybody seems to think, this is just the cost of running my business. No, it's not. You need to tell your business what those costs are.
Yeah.
So just to recap, the general thing is, with profit first, we flip the formula from sales minus expenses equals profit to sales minus profit equals expenses. Not on your books, just in your brain and how you use Fuse Financial and how you plan how your money moves around.
Yeah.
The idea is you want to have your profit first, and then everything else is towards your expenses, because your business has to be profitable. So your business ultimately has to serve you first. Like you're the one that went into business. You don't want to be all stressed out, which means that you have to be cash profitable, not profitable on the books, actually have cash. Well, you got to be profitable on the books too, but you want to have that cash profit in the bank, ready to distribute to you, the shareholder. You may have partners, that's fine, but let's just say it's you. Even if you're a sole proprietorship, it doesn't matter. It's your business. You want to be able to distribute that money because you made that profit to you. So what we do is we start by determining how much profit you want to pull from your business. And that's going to leave you with how much money you can spend on operating your business. So I'm going to use very, very simple numbers here as examples, so I don't confuse anyone. And Amna, do you want me to address questions if they come up, or do you want to do that at the
there
end?
are some comments and questions that are coming up.
Okay.
I think there's mostly comments right now. Beverly Gunn is saying, in construction is closer to 65 to 90 days for payments for hourly services.
Yep.
That to me is absolutely nuts.
Yeah,
I don't think
Beverly knows construction inside and out. So you got to talk to Beverly. I know Beverly.
Okay, that's fantastic. And Masaf is just saying, turbocharge session with solution options to the problem. Great host, Amna, and great guest pair.
Yeah. Awesome.
Yeah.
Awesome. Okay. I just wanted to know if you want me to stop. I'm totally good to stop. If there's a question you want, just cut me off. Okay. So I'm going to use very simple numbers just for example purposes so that it's really, really simple. So if your business is doing $100,000 in revenue, and you've decided at the beginning, I just want to take 1% as a profit distribution. It's $1,000, right?
Yeah.
So what you want to do is you want to make sure you're separating that $1,000, and you do it in increments. And you set up an account that you can move that in with
Right.
with the platform. But what you want to think about is that of that $100,000 that comes into your business, you're deliberately removing $1,000, meaning you only have $99,000 left to operate your business. This is over the course of a year. So instead of thinking I have 100,000, I only have 99,000 and not a penny more. That's it.
Yeah.
So then we have to look at, what do you get paid for the job that you do in your company? You're doing a job, it's your business, but you're actually working. So let's just use for an example, $50,000 a year.
Yeah.
So now we take that $50,000 and we subtract it from the 99,000 that you have to operate, which means you've got $49,000 for operating expenses. You see how I'm being very intentional? You've got to get a $50,000 salary. You want $1,000 in profit. I could only spend $49,000 in operating my business. But here's what people don't think about. You're going to have to pay tax on your bottom line. The intent is to be profitable. So we've got to make sure that we have money reserved to pay that tax bill. So let's start reserving money for that as well. So let's just use a $20,000 tax bill, for example, because we have different rates all over the place. But if you're a sole prop, you're probably going to pay around 20 grand on that.
Yeah.
So we've got to remove that $20,000 from the $49,000 we have left to operate and put that in a separate bank account to make sure that we're not spending it on operating expenses. So bottom line here is we're left with $29,000 to operate our business. All of it, all the other expenses, your rent, your utilities, your staff, your subscriptions, your promotions, all of that stuff. You have $29,000 to spend. That's it. And if you're diligent about it, you actually will fall into that $29,000 and hit your target of making $50,000 a year and taking $1,000 in profit distribution. But if you're looking at your business now, let's just say this is you, right? What if your expenses are more than what you have to spend? Right? Because that always happens. When we analyze somebody's business, we say, this is all you have to spend. Oh my gosh, I'm spending this much, right? The usual thought that a business owner will have is, I just need more sales. I need more sales, I'll be fine, it's great. But here's the trick. The number one way to double your revenue is to cut your expenses in half. It is a fact. So let's look at the expenses. We're going to do an expense analysis. I'm going to do just very, very quickly because I want you to just have an idea of how you dive into your expenses and how you remove things that are not necessary. So if you've got access to your books, great. If you could just use your bank statements and plug it into a spreadsheet, whatever it is, all I want you to do is start with things that are fixed versus variable. So fixed things are things like rent, salaries, anything that doesn't change month to month. And then variables are things like staffing, if you've got part-timers, hourly, subscriptions, softwares, meals and entertainment, all the things that fluctuate up and down. So look, we're going to separate the two out on your spreadsheet, or do it on paper. It doesn't matter. It can be very simple depending on the size of your business. So let's look at variable costs first. When you look at your variable costs, I want you to look at each individual one and determine whether, is this a necessary cost? Is this a negotiable cost? Or is this unnecessary to the operating of your business? If you didn't have this, would your business drop off the planet tomorrow? The idea, okay? Necessary, you absolutely need this. You cannot operate without it. Negotiable, there might be some wiggle room in there. Unnecessary, it's nice to have, but I don't need to have it. So those variable costs that you're going to look at, like I said, subscriptions, overlap. Overlap is a big one. There's so much tech out there. People are very heavy on tech stack. And quite often we have softwares that actually do what the other software you're paying does as well. And we don't realize that. Maybe it doesn't do it to the same degree, or you don't like it as much. But when you're negotiating costs, you've got to look at what is nice to have versus need to have. That's really important. So sometimes we do have to cut back because we only have this $29,000 to spend. So then we're going to look at fixed costs. And with your fixed costs, you want to look at things like, can you negotiate better terms on your rent? I know during the pandemic, there was a lot of negotiating on rent. People redefine the terms on their leases because everybody was hurting, and there's after effects of that. So if you are, in a place where you're at a high rent and maybe it's lower now or something, just economically, maybe you could have a conversation with your landlord, negotiate something a little bit better that suits you. Could you source other utility providers? Could you find a better phone plan for your company? There's lots of voiceover stuff that's really, really cheap now as opposed to landlines in the wall. Could you look at alternate alternate source energy companies. There's always a little bit of wiggle room when you're analyzing this. So the whole idea is when you go through this simple little exercise and you break fixed versus negotiable. With the fixed, you want to see what fixed versus variable. With your fixed, you want to do the utmost you can with it. It's a hard space to wiggle. But your variable cost is where you really want to dive in, and you would be amazed how many percent points you can knock off of your expenses to get you to that 29,000, and you don't even miss it. And then it gets a little deeper and a little deeper through the process, depending on how bad it is. But just have a look at it and make sure that everything that you're spending, every dollar that's going out of your company is a dollar less in your pocket. So do you really need to spend that money? And quite often we as business owners don't really look at our numbers. We just think this is the way business runs. The numbers are your story. The numbers are going to be part of your plan to get you to success. Absolutely.
And I will tell you, just in the financial stack side, like, so a business owner, the minute they get started, they have to sign up for a bank account, they have to sign up for a payroll platform, an accounting platform, then they have to sign up for an ability to receive payments, and it's not made very easy for them. So even speaking with Andrew, he has like 4 different platforms, like, so he's using one for EFT payments, then he's using one for credit card payments, then he's using one for e-transfers, and then he has a bank account, right? And then invoicing tool he's using, I believe, QuickBooks at the moment, and then you have an accounting platform, then you have something to like pay your bills with, because bank accounts don't help you manage like it's up to business owner to log in, and then they don't let you delegate, right? They don't let you delegate the bill payments that easily. So do look at your financial stack, do look at your technology stack for your marketing, do look at your technology stack for your sales, and say, where can I cut down? Because having all these little platforms that do just one thing very well, and you think that because they do this one thing really well, they're really necessary, it's actually not true. I was reading this article recently that came out. One of the things was, and one of the suggestions that I would make to small businesses, like, end your auto renewals. Like, wherever you have auto renewal, like, go into the platform and the auto renewal, right? Because then it actually put something in your mental space that you actually have to do this analysis at the end of the year of how much you use this. People like talk about this in the closet. Like, if you wanted to like create more space in the closet, like, look at the clothes that you wore the most, right? And then the rest of them are just standing there taking space. So do the same thing with your subscriptions, right? Get rid of auto renewals. So at the end of the year, you have to make that conscious decision. You have to assess the platform. You have to look at what new innovation that they have brought in. Do a quick search on Google, see if there's competitors. Go to G2, look at reviews, compare the product, and see if it is very easy to switch to another product, right? That is going to help you save cost. Subscription costs are causing businesses a lot of money, because a lot of the time it's on auto renewal, it's out of sight, out of mind. So that's exactly what you're saying not to do.
And knowing Andrew, just those payment platforms you were mentioning, I know he's doing that because he's finding better rates in different platforms because he's a PFP, right? But it's creating more work. He's got to go here and he's got to go there and do this, but definitely look for overlap and exhaust the whatever software you're using for, like, let's say we're using Fuse Financial, right? Exhaust every single thing that Fuse Financial offers and get rid of all the other things that are overlapping. You don't need them. So explore your softwares, whatever you're using, make sure you explore, deep dive. And again, it may not be all the bells and whistles that you're used to, or you might like something about this other one better. But realistically, when you're running a business, again, every dollar out of the business is a dollar out of your pocket. So let's dig in.
Exactly. And for people here that are new to Fuse Financial is a all-in-one, simple and easy to use platform to run your business, the financial day-to-day management of your business. So it's a bank account, it's a wallet, it gives you spend cards for your employees and yourself, so you can separate your spending even more and control it better. You can categorize your transactions right in the platform. You can separate them for taxes and recovery all in one place. We provide 3 payment methods to collect your invoices. We reduce your cost for credit card payments from 2.9% all the way to 2.2%, as well as we make all these other payment options very, very cheap. For example, bank transfers are costing some people 1% of their revenue, which is outrageous. And our cost is like $1. So it
Phenomenal.
definitely is worth to do this analysis, if not every quarter, like at least once a year.
Every month if you can.
Yeah, every month if you
Every
can.
month, be on top of your numbers. It's a business, but Anna, I'm telling you, like when I found out what you built, you know how excited I was when we
I
talked.
know.
I was like, what have you built here? This is amazing because it's the answer to so many business owners' problems, and
Yeah.
it's so in sync with what we teach and the strategies that we create. You're literally solving all the problems in line with our strategies, which is phenomenal. So I love it. So I
We'll
can't say
we'll
enough.
we'll go into deeper. We will go a
Yeah,
little
you'll
bit like
show
we'll
some
give
stuff.
a yeah,
Yeah, but
yeah.
we did promise to talk about some ways to get more cash in the door, that sort of thing.
Yeah.
So is it okay if I just touch on
Yeah.
that? Because
So
you
yeah,
sort of
so we
started
talk
one.
about expenses.
Yeah, you were talking about how long it takes business owners to get paid from their
Yeah.
customers. And that's one of the things that we do look at too. And everybody can look at this. You want to look at it, it's called lead lag time. And Beverly, you know all about this. I'm glad you're here. Hello. Lead lag time. So I'm going to give you an example. A customer calls you, places an order, right? And now you have to buy the product from the vendor, get the product back, sell it to the customer. Now you give your customer 60 days. Let's say your terms are 60 days to pay the invoice. This is just an example. But your vendor wants to be paid in 15 days
Yeah.
for that product that you had to buy to sell to your customer. So that is cash out of your pocket for 45 days, providing your customer pays on time, right? Not everybody pays on time. So what you want to do when you're looking at lead lag time is you want to flip those terms. You want to give your customers 15 days to pay at the most, 15 days to pay on this product that they're buying. And then you want to negotiate at least 30 days with your vendor. So you're freeing up those 15 days in there and you're not acting as the bank draining your own cash, because when you think about one customer that does that, what about 10 customers, 100 customers, 1,000 customers in a month that are placing orders and you're fronting all of this money? Your terms need to flip around so your customer has less time and you have more time to pay your vendors. Does that make sense?
Yeah. That makes a lot
Okay.
of sense.
A lot of people don't know that. They
Okay.
think, well, my vendor terms are my vendor terms, and I have to give my customers 60 days. No, you don't. This is your business. You
Yeah.
design it the way you want to do things, right? Now, the other thing I want to touch on is receivables, because a lot of people have seen this long list of accounts receivable, and they get in the over 90-day column, and you're like, I sold this a year ago, the guy still hasn't paid me. So when you're struggling for cash, we have this thing that we do, which is called pay-to-day discounting. All right. So it's very, very concise. Those customers that are on your accounts receivables list who have been there forever and are not paying you, the fastest way you can get cash in the door is to get on the phone and call them and offer them a 5 to 10% discount on their bill if they pay it in full today. And
Yeah.
I've done this a lot with people that are struggling. You'd be amazed at how many people will say, "Oh, okay, but I'll pay it next week." No, you have to pay it today, or the offer's off the table. All right. And after, would like to get that money, they could e-transfer it. They could drop off a check. You could send somebody to go pick up a check. But the idea is it has to be in the door today to get that 5 to 10% discount. People will be incentivized by that, and it's just a trick to get cash in the door when you really need it. And another thing to keep in mind is if you don't call your long outstanding receivables, you're rarely going to get paid because they think you've forgotten about them.
Yeah.
I mean, I know when I used to work in clients' offices, as the bookkeeper, people would call from different companies and say, we need your bill, we need you to pay this, we need you to pay this. They're the ones that got paid. The people
Yeah.
that didn't call, we didn't pay them. Right. So you as the business owner have to get on the phone yourself because you're going to be much more effective than a receivables clerk.
Yeah.
Because it's your business and your cash. So one of the tricks that I used to do with clients is who are really good on the phone about getting their receivables is they had a sticky note on their desk. They had to make 5 really high, long outstanding receivables calls a day. And that was to generate X number of dollars per week to hit their goal for the month to be able to do payroll.
Yeah.
And when they actually did those 5 calls a day, cash started coming in the door and they were able to hit their month-end goals. So just little things like that. The idea is to always be cash positive.
Yeah.
right? So when you don't create debt, or when you eliminate your debt and then you become sustainable, then we introduce strategies to grow your business the way you want it, because then you have a handle on the way that the cash is moving through your business.
Yeah.
And this is when we start wealth building. So your money making money for you. And I believe you're having a session on that as well.
We
But
are.
the idea is get the business financial house in order, understand what it's doing, tell the money where to go, get control of it, and you will get there. And using the Fuse Financial platform, you're going to tell your money where to go deliberately, with intention. You're going to cut costs and all that stuff.
Yeah.
And that's where you're going to get to that beautiful place of financial freedom.
Exactly.
It's simple.
I want to just share a story. So one of my colleagues had a HVAC come in and do some work, right? And they sent an invoice using, I think maybe it was QuickBooks. And then he got reminders as well. But on QuickBooks, they basically just put in their bank information, right? So this is a person, now they have to go to a branch to get that bank information input, right? So they can create them as a personal payee, or they have to call the bank. And that's basically stopped them from taking the action of making the payment to this business,
Mm-hmm.
right? And 90 days, or like almost like actually 6 months later, the small business owner called him and he's like, I don't think this invoice was ever paid. And he's like, I don't think this invoice was ever paid either. It's not because of the lack of cash flow, but because like the friction to get to the payment.
Yes, friction.
Yeah, it was so much that it just fell off the radar of my colleague that I have to make this payment. And then as like, because they couldn't just click a button and make a payment, it just kind of like, okay, I'll take care of today, tomorrow, Sunday. Sunday came and went, and like they totally completely forgot about it, right? So when they called again, they asked like, okay, well, can I just make the payment through credit card, right? Like, we'll just make the payment right now, because the way you're asking me to make the payment is asking me to go to the branch or call them to add you as a personal payee, and then
Yes.
like, make a payment to you. I'm pretty sure other small businesses struggle with that as well, to collect their payments.
Oh yeah. It's think about the Amazon buy now button. They eliminated any friction whatsoever. That's what you want to do for your customers.
Yeah, that's what you want to do for your customer. Okay, so we have talked about expenses. We have talked about revenue. We want to talk about the profit in the equation.
Well, the profit is what you want.
Yeah.
I mean, there are guidelines. If you're at this revenue level, you should be pulling this much from profit. But I mean, I've seen people go way up. I've seen people go down to just minimum. You can reduce it based on what your overall goals are. If you know, like for example, if you want to take, let's say you're at a 10% profit distribution, and we work on a strategy because we know you want to buy or open up another location. Well, that takes capital, right? But you don't want to go to the bank. You want to actually fund it yourself. Right? You may choose to drop the percentage of profit and put it into an intended account for purpose for your goal there. But you can also do that with operating expenses. It doesn't have to be profit, because we want that to be the most. You can do it with all sorts of things. So profit, literally, you tell your business what you want your profit to be. But what I think would be really cool right now is to see it in action. If you can show us, because people may not understand the idea of moving money around into separate wallets and what that actually looks like, and how it visually just shows you, this is all I can spend. So, you've had that thing where you're sitting at your desk, you're like, oh, I really need a new chair, right? Yeah. Do I have the money to buy a new chair? I don't know. Let's go check my new purchases account or development account. Do I have any money in there? Instead of going to operating expenses and coming up short on payroll.
Sounds good. So with that, I am sharing the Fuse Financial platform. So do you see it on your screen, Lisa? Let me know.
No, I don't.
You don't? Okay.
I do not.
Okay. I think we
now
see
I
it.
do.
Okay.
Now I do.
Perfect. And folks, if you have any question throughout this, please let us know. You don't have to wait till the end. We will answer questions. We have some comments coming in. We will answer questions as we go. This is for you as much as this for me, and I am enjoying this conversation with Lisa. And I actually have learned a lot. Like some of the ways that you have flipped the switch for me, even to think about how to think about profit and how to think about expenses. It is I think this is the stuff that should be taught in school, and I don't remember learning this at all. Perfect. So as Lisa mentioned, So what Fuse Financial does, and some of the other bank accounts, and if you have other bank accounts, they help you do, is that you can open different accounts. What we also do is we name those accounts for you as well. So there's a revenue account, there's an expense account, there's payroll, there's taxes, and there's profit. And once you have figured out that, hey, your target is to have 10% profit from all of your revenue, what you do is that you basically very easily transfer funds between your accounts. So you click on transfer funds and you select your revenue account, and you can also connect the Fuse Financial platform to an external account as well. Just because if you have different functionality or different or you prefer a certain bank, but you want to manage all of your business through one platform, we are very flexible in that regards as well. So let's say this is your revenue account, and at the end of the month or at the middle of the month, whenever you have this scheduled time where you're going to go and transfer the funds, maybe it is like every Friday evening. This is
Yeah, you want to try and do it on a rhythm.
on a rhythm, right?
Yeah.
Whatever that rhythm is, do you want to talk about, like, Lisa? Because I don't know what the rhythm is or how people can.
So the original one they start with is every 10th and 25th of the month, because 10th covers your middle of the month expenses and the 25th covers your end of the month or the first of the month expenses.
Okay.
The idea being, you could do it weekly, you could do it every payroll run, whatever works for you. The idea, though, is you're not diving into your bank account every day going,
Yeah.
is this bill going to clear? Is that bill going to clear? You know ahead of time. You've moved the money into the right account. It's going to come out of the right account, and you're covered. So you're not always obsessed with your numbers.
Yeah. Okay. So right now I'm transferring $5 to my profit account, and then I'm going to show you how to transfer to the rest of your accounts as well. So you can do that very easily on the platform. There you go. So that $5 has been put into your profit, right? And then you can do the same thing. You can go into, whatever so you would transfer the funds first to your profit account, correct?
Yes.
Okay. And then you would put it towards whatever fixed expenses you have. So if you wanted to create separate accounts for rent or like however
you could. I wouldn't go that granular, because you know what? The more you do that, and you can, what I love about this platform is you can be as granular as you want. I have like 12, 15 accounts in some of my companies. So you're creating purpose accounts, but when you get too granular, then it gets more work for the business owner. Exactly. You want to try and keep it simple. You know, your operating expenses month to month are X number of dollars. It goes in here. You need that percentage moved over, and you're covered. And when you want to get really granular is when you're doing things like development or new location. Like those are very intentional. Debt reduction, that sort of thing.
Okay, perfect. So so you move a percentage of your revenue at the 10th or the 25th of the month to your expenses account. You know what your payroll is, right? It's because you are doing the payroll on a regular intervals. So you go and move that amount as well. And then you can also do some of these other accounts that you would open for special purpose, for example, like office move or leasehold improvements or development or like anything like that. And then I think you take a percentage of your taxes as well. So this is both income taxes and sales taxes, right?
You can combine as long as you are very clear on your numbers.
Okay.
And you designed it ahead of time. You determine, by looking at your information, you determine, I need to put aside 18% of every dollar to cover my taxes and my HST. And you don't have to figure it out on every sale. It's just based on the balance of your account, and you just move it over once, and it just starts accumulating. That's it.
Perfect. So that's how the accounts work. Out of the accounts, you have option to send a bank transfer very easily to a payee. So we do not make this difficult. You basically click on here, you create a contact, you can send money out to a payee. And then you can also go in and you can send an e-transfer to someone as well. So on our platform, we actually do not create more work for small business owners. So there is no limit on the e-transfer. The only limit there is per e-transfer, you can only send $25,000. Now, I know that business banks, even the large Canadian banks, they're making this very difficult, right? So there's a limit of 10,000, and then the maximum limit is, I believe, 20,000 per week. But what I would say, as somebody who has a bit more experience in payments and banking side, this is a very good payment method, but not as used widely by small business owners. This is a real-time settlement. So you want to do this, you want to use this method with your customers, then there is no risk, right? Once the payment is settled, it's in your account, it cannot be called back out of your account. It's the money's in your account, there's no hold period, you can use it right away.
So we're eliminating things like the Pluto wait.
Yeah, so we're eliminating
Okay.
payroll rate.
Yes.
We're
See?
eliminating, yeah, so we're also eliminating like bank transfer rate, right? So you want to make sure that as much as possible, you are asking your customers or giving them the opportunity to make a payment very easily through e-transfer. And I'll show you how you can do that through Fuse Financial. So creating an invoice is super simple and easy. You come in here, you put in your terms, it's due now, your branch, or you can say like 15 days, 10 days. You can customize it as much as you want. You add your
Could I just,
customer.
my
Sorry.
understanding is we could also pull the invoice if you've got a QBO
Yeah.
file or Zero,
Yes.
you could
So
pull, you don't have to duplicate it, right?
yeah, you don't have to duplicate it. So the system is fully integrated into multiple accounting platforms. So mine is right now, my account is connected to QuickBooks Online. You can connect it to Zero, FreshBooks, Wave, Oracle, Sage, whichever way you want to manage the centralized system of your bookkeeping, you can do that. And these platforms do make it very easy for you to create invoices as well. It's just the next step is very disconnected, which is the collection of the payment, right? The reason you're sending an invoice to your customers is so you can collect a payment, right? So we facilitate that. So you can bring in your invoices from any of these platforms or from any of your bookkeeping systems. Or if you're on a go, you can also create an invoice in our system and we push it back to your accounting platform. So it's a very seamless integration. Whether you're on Fuse or on your accounting platform, it basically acts like one platform. So creating an invoice in our platform is super simple. So you select if you have different branches. So we help you manage that as well. So you select your customer, you add your product and service. So let's say I add like a month-end close, and I know it doesn't cost $3.50, but this is just my way of showing. And then we have made the taxes very simple and easy for you to select. They're already default. We automate the tax separation for your accounting as well. So it automatically gets accounted for properly in your books. And by doing that, you can click review and save and review and send an invoice to your customer. And when the customer receives an email, they click on pay now and they come to this invoice page through which they can select how they want to make the payment. So they can pay with the payment, and my account unfortunately is not connected to a credit card acquiring right now, just because this is a demo account. But they can click on pay with credit card, enter the credit card information. They can pay with bank transfer, so they just enter their banking information. And so they don't have to go to their bank account or call the branch or visit the branch or call their bank to enter your bank account information. They basically just enter their bank account information that is readily available to them, or you can ask them to pay you through, or they can pay you through e-transfer. And they don't have to go to the bank account, log into their banking system, enter your email, enter the amount, none of that. They just click on send request, and Interact sends them a money request. They just click on accept. They go into which bank account is coming from, and voila, you have money in your account. And the minute the invoice gets paid, you have a status that says it's overdue, it's processing, it's draft, and you can easily manage, your revenue. So who you need to call, who you need to follow up with, that is all here. And the next step that we're doing here is we are also looking at basically automating the notifications as well, so you don't have to spend time notifying like who is late. And we're also bringing on, automatic fee on there. So some of the small business owners want to say, hey, we want to get collected. We want to get paid sooner, faster. So if they are 5 days delayed out of our 15-day term, let's automatically charge them a 1%, 2%, 5% fee, right? And automatically calculate that. So when they're making a payment, we collect that fee, right?
Perfect.
And that's one way of doing this, right? And it's not necessary if you don't want to do that. But we want to be able to facilitate that if a small business owner wants to do that.
Right. So Sarah was just asking, does the invoice recipient also need to have the Fuse Financial platform?
They don't.
Okay.
Yeah, they basically click on Pay Now. So if I show you my Gmail account, and don't judge me because it's a lot of unread emails. I was away for 2 days, and the life of small business owner. Just right now, like I'll show you. So this is the email that we just initiated, right? So I asked for this amount to be paid. I can click on accept request. It just
We
works
don't see
like,
your email.
oh, sorry, you don't see my email.
No, you're probably on another screen.
I am on another.
That's why.
Page. Yeah.
While you're looking,
Okay.
I'm going to answer Sarah's question,
Okay.
asking if Fuse is the equivalent of Relay, the Profit First partner in the States. That is the reason why Amna and I are like so excited about this, because Relay is a Canadian company, but they don't offer services in Canada. And I find what Amna has built with Fuse Financial is ridiculously powerful. So we are trying to work together on that to be everything you need in exactly the same way Relay does for the States, but even more. Because I see these names here. Hey, Michelle. And I know a lot of these people, and they're bookkeepers that have gone through a lot of work to make their processes better.
Yeah.
And I know that they can see they're eliminating Pluto, they're eliminating Rotessa, they're eliminating. Oh, am I allowed to say names? Sorry.
Yeah, for sure. Right.
You're putting everything into one, which is great. And eliminating costs, and also easing up all the friction. So I just wanted to address that few things that came up there.
Yeah, for sure.
Michelle is also asking, does Fuse Financial integrate banks and bookkeeping software? For example, can I transfer money between the bank's accounts in Fuse Financial?
Yeah, so you can transfer. That's the functionality that we just talked about. And hopefully now you can see all of the tabs that I have opened. Just because I wasn't sure if we were able to show that. So
now we can see it.
Okay, now we can see it. Okay, perfect. So what I was showing you before is that I was basically showing you this screen, and I don't think you got to see it either. So right now my account is connected to QuickBooks, but you can connect it to Xero, FreshBooks, Sage, Wave, Oracle, and it seamlessly works as one. So whether you create an invoice in any of your accounting platforms, or you create an invoice in Fuse, it will be centralized into your accounting platform. So you have created an invoice into QuickBooks. You can click on import afterwards into here, into invoices. You can import your invoices. All of your invoices will come in here, and we will send them out with the Pay Now button. And what the Pay Now button will do, so let me just go back and see.
We need to teach you Inbox Zero.
I know. Well, no, this is my junk, kind of like this is not my real inbox. So please don't judge me.
I'm just kidding.
I signed up for subscriptions on this, to read stuff, right? So this is my. This is not my work inbox, guys. Please.
Okay. Be like, whoa.
So this is what your customers basically see. They get an email. They click on Pay Now. They see the invoice that you have sent them. They see what services or products you have charged them. They see all these details. They can click on Pay with credit card, Pay with bank transfer, Pay with e-transfer. E-transfer is a money request. So you're not giving them an email address and saying, hey, you're not creating any friction. You're not asking them to, hey, click on, take this amount, take this email, log into your bank account, put in this email, add me as a payee, then put in this amount, and then send me an e-transfer. No, that's not what we're doing. We click on send request, right? They get an email in their inbox from Interact saying, sorry, I think I've already sent request on this, so that's why it's giving me this problem. So where is it? Just give me 1 second. Yeah, so Interact sends an email saying, hey, your company has requested this amount. So your business, so your customer just needs to click on accept request, the money and select the account they get the money, they want the money to get pulled out from, and the money gets pulled out from that account, right? If they want to pay the invoice using bank transfer, they basically provide their banking account information to our platform, and we pull the money out of their account. So they're not going into the branch, they're not going into their bank, calling their bank, trying to add your banking information as a payee and then making the payment to you. So we have basically reduced a lot of the friction,
A
right?
lot.
A lot of friction.
Oh,
And to answer the question on can you make transfers, you can make transfers between your accounts. You can have as many accounts. So just to show like there is no limit on the number of like wallets you want to have. So I've like, because I only knew like, I wasn't thinking very creatively. So I recreated like the bunch of the same accounts over and over again. But just to show you, to kind of illustrate to you, like you can have as many accounts you can open, you can transfer between your accounts. You can also transfer between your account with Fuse as well as to your external account. That mine is with CIBC, but you can have a, because we don't right now currently support USD. So if you have an account somewhere else for USD, you can transfer money back and forth. So there's no limitation. We also talked
that
about,
is coming, right?
yeah, that is
Yep.
coming.
Yep.
So we also talked about being able to send a bank transfer to somebody else without having to go into the branch. You can add them as a payee here. So I can send money to any of these payees. It's very simple. Basically, I go, so I want to send a bank transfer. I pull in the account that I want to send the money from. So let's do this wallet account. I select the payee, so I'm going to do this, and I put in the amount. If I want a message, I can do that as well. If I want to send e-transfers, I select the account. So it's a wallet account. I select whoever my payee is, and same way, like managing the payee, super easy. I say, how do I want to send the money? So I say email, text, and if I'm selecting this payee, if I've set up like security question for them, that would show up here, and I put in the amount. And one of the benefits we were talking about, how banks have small businesses limited in terms of how much e-transfers they can send. We actually don't have any limit in terms of e-transfers. So we can, you can send e-transfer. There's no weekly, daily, monthly limit on e-transfer. There's per transaction limit that is set up by Interact, which is $25,000, but you can do as many e-transfers of $25,000, as many you want. And so that's why it doesn't restrict our ability to request money as much as we want, just because there is no limit. So that's the functionality, the banking side. And then we just talked about invoicing and how we're making a collection of your payments so easy. But I also want to talk about Fuse cards. We just launched Fuse cards. So these are your prepaid Visa credit card that you can issue to your employees, to yourself. And now you can even restrict your expenses even more. So you can say, okay, I only want to maximum spend $1,000 on Amazon, right? Or on a subscription or something like that. So you put in the limit. You can say, okay, this is for my HubSpot, right? Or HubSpot or ads or whatever. Or you can call it Google Ads. So you just want to spend 1,000 transaction limit, like for Google Ads, it doesn't matter because they do like a bunch of different transactions. So if you wanted to put transaction limit, you can do that too. You can put 1,000, 2,000, 5,000, whatever amount. So let's put this as 1,000. You can say, okay, every month, this is what I am willing to spend on ads and nothing more. And at that point, your card would restrict that spending once it's reached $1,000 or $2,000. This is optional, but if you wanted to auto destruct the card, so you say, okay, I'm running the campaign for 6 months and no longer, you can set that optional. And you can also say, okay, well, if you're giving this card to an employee and they're always delinquent on putting in receipts and you have to like always run after them, you can say, hey, if they are missing 5 receipts, pause the card, right? Because it's going to force the employee to upload the receipts to the transactions automatically if they want to unpause the card. And the other automation that we're adding here that you'll see very soon is we're adding your GL codes. So whatever GL codes you're using in your QuickBooks, whatever, you can select that here. and you can put in the tax code, and all of your expenses for this card will get automatically, like your transactions would get automatically categorized to that GL code and for that taxes. So it's very simple. So you click on create card, a card is created, and you can start using it. Your employees can request a card. You can go in, you can approve, you can deny, you can cancel, and a physical card gets mailed out to you. If you need a card right away, you can get a virtual card. So this is functionality that is not available to small businesses. I believe there's one banking platform, which is the RBC Express, but they also charge you, I believe, like $150 to $200.
And it's a nightmare.
Yeah. Oh, okay. Well, great
Yeah, it's a
feedback.
nightmare.
Great feedback there. I did not know.
Your screen went all wonky there.
I know, because like I have like a lot of small businesses that I've sort of, when I was building this functionality, they're like, oh yes, so it's kind of like similar to RBC Express. I'm like, it will be nothing like RBC Express.
No. Your whole thing is eliminate friction. Let's make it easy because you know it.
Yeah, for sure. So I'm going to go above and beyond. One of the things that we talk about, and I think you're a big proponent of this, Lisa, as well. You want to talk about like what is the benefit of setting up recurring revenue for your clients, and why is that important? Because it just even takes the whole guesswork and collection of invoices, like it automates all of that.
Yeah. Okay, are you talking about front-loading the payments? Because when I work with the bookkeepers and accountants, I'm always teaching them you're going to bill out for the month ahead of time. But I think you're more talking about pre-authorized, like your bill is going to be X number of dollars a month. We're going to take that from you automatically. We're not going to send it to you and wait for you to pay us. Is that what you're talking about?
So we do both. We okay. We automate the bill side as well. But this is actually about invoices. So I know that a lot of businesses struggle with finding a method to collect recurring invoices, right? Or recurring payments of revenue into their business. So within the same platform, within the same tool of invoices, you can actually set up recurring payments for your customer. And it's very simple. It's just like creating an invoice, right? And as I'm doing this, right, we want to talk about why is that important for small businesses to always be thinking about, okay, this is a client that I'm going to be charging every month. Let's figure out a way to actually reduce the friction for this customer, or for my customer, as well as for myself, and get paid.
Yes. Consistent cash flow. Because when you have dips, if you get paid by 2 customers one month and 50 the next month, that's not consistent cash flow. And the key to managing your money properly is to make sure it is consistent. And monthly recurring revenue is key. Having a way to do it just automatically. So again, we're eliminating all those other platforms that you're paying for, all these little things everywhere to do that. Would it be also better than, I'm assuming it is, better than having a monthly recurring charge on something like Stripe where you have to run it through a credit card? That seems like it would be a lot more costly.
Yeah, so Stripe right now charges 2.6% for credit card payments, plus I believe it's 30 to 60 cents. QuickBooks charges 2.9%, and they don't do recurring payments. And other companies, for example, Square charges 2.9% plus 60 cents per transaction. If you go to Fuse Financial pricing page, you will see that our cost for payments for credit cards, and that was one of the big things that why we did the partnership with Clearly Payments and Elavon, is to actually help businesses save money, right? So what we do transparent pricing, right? And for recurring payments, the cost is even lower for accepting credit cards. And because the businesses shouldn't have to choose like, okay, this is something that's going to help me get payments faster, but it's also very costly, right? We didn't want to make that choice for the small business owners. What we wanted to say to small business owners, we're going to find a way for you to offer this option and save money, right? But and collect invoices faster. Because our goal when we were building the invoices product and functionality was to get paid in less than 2 minutes. And so we can only get paid in less than 2 minutes is by eliminating all the friction and giving multiple payment options to your customer, right? But at the same time, not breaking your bank, right? So not charging you 5%, not charging you 2%, or 2.9%. So our cost is very it's very transparent. It's very low. We basically take the cost of the card. It's called cost plus pricing, and we take the card of the cost plus we build a little bit of margin on it. So on average, what works out for small business owners is a cost of 2% or 2.2%, which is way lower than what you're paying, right?
Yeah.
So it's 2.2% plus 20 cents per transaction.
Beautiful.
So it's way lower than what you are getting from Stripe. And then it's in the same platform. It's not like you have to get
Yeah.
another platform, download
So
all
not
the,
only are you eliminating costs of everything else and reducing costs of things that we have to use, you've got it all in one spot.
yeah.
Like, I'm
So we got it
very
all in one
excited.
spot.
I get excited when I'm excited about something. I share that.
For sure. So let's say like this is customer ABC. So we created the recurring profile and now use save and review. And this is going to become live like next, like tomorrow, right? So the first invoice will get created when they see the invoice. They get like these payment options. They see like how much the invoice for, the recurring schedule, just like what you created here. They will see that on monthly, on every 16th of the month we're going to start collecting money. And they can select which payment method they want to use. So every month they basically get like we pull the money, and then when they get the invoice, all they see is this portion of the invoice, which is telling them, hey, we basically it's a record keeping for them, right? So it's giving them a receipt saying, hey, we took the money, here's the receipt. So it automates.
And just to clarify, it's instant settlement, right?
It's instant settlement, yeah.
So you don't have to wait 3 days for Stripe or 5 days for Pluto. It's there.
Yeah. So
Okay.
for credit cards, they settle every night into your bank account, right? So it's on the same day that you collect the money. What we do is like, okay, we give you the status update that the money was the card was processed properly, right? So that was successful. And then at the end of the night, because it's a batch settlement, you get a bunch of deposits, but we already match them with your invoices, and we automatically mark them paid, and you have that money available to you to spend right away. For for e-transfers, there's no hold period. The minute they accept the request, send you the money is settled into your account. For bank transfers, there is a 5-day hold period, but it's not that the money is not sitting in your account. The money is sitting in your account. It's on hold. You can see it, what's been paid, what's been collected, and which payment did not go through. What I heard with Rotessa from Andrew was that for 5 to 7 days, he has no idea who's paid, who has not paid.
Yep.
So he can't even follow up with them.
Yep.
Yeah.
True. We use
Yeah.
Rotessa as well.
Okay.
Now.
Okay. And this is how your accounts and bank transactions are. So you can look at that. So card transactions, your employee have access to these card transactions. They can go in, they can select what GL code they belong to. They can also go attach receipts. They can split the transaction 5 times if they want. They can put in the tax code. They can upload the receipt. So let me select the tax code. They can upload the receipt, and it's all saved here, and it integrates back into your accounting system. We are coming out with different, and you can give access to different employees here. And what we have done is to safeguard small businesses. Only the business account holder has access to the functionality in the bank account, so nobody else can touch that. But you can bring in a manager and employee with different access points and different accesses, so they can get their job done. So, for example, an employee, and it actually tells you when you create. An employee can send invoices, they can request cards and payments, they can upload and attach receipts directly to the expenses. What that means when they can request payments, and it's our bills module that is coming soon, is that they would be able to, when you have bills, they would be able to basically create a bill and send it to you for approval automatically, where you just click on approve, and then it gets scheduled to be paid on the day it's supposed to be paid. right? So there is no that, hey, I only got today as a Sunday to do my bookkeeping, so let me go into my bank account and let me just process the payment today. No, we're not going to do that. We're going to do exactly what Lisa said. We're going to maximize the time our vendor has given us or the time we have negotiated with our vendor to make that payment, but we're going to automate that for you. So you can create the bill today whenever you have time. Your employees can create the bills, they can attach the bills. All you have to do is click on review, approve, and then the bill gets scheduled to be paid on the day it's supposed to be paid.
Perfect.
Yeah, and that is in testing right now, so it should be out soon.
Awesome. The
Yeah.
whole platform is amazing. The way what you've built, I was super excited to see it. I know there's a lot of questions. Some people are bouncing off because they've got other meetings to go to.
Yeah.
I think we should do an in-depth, just another demo just of the platform, because there's so much we could dive into
Yeah.
and how it relates to what everybody's doing, that I think you could spend a lot of time on that, because it's really, really cool. Every time you show me something, I didn't even know you did that, like that's really, really great. And
For
again,
sure. Yeah,
the two
I'm
things,
happy
the
to set
two
up another demo.
methodologies fit beautifully together.
Yeah.
It's just the bottom line is get a handle on what's going in your business, eliminate the friction for your customers, and just know what's going on. And then
Yeah.
you build. Yeah, that's it. That's awesome.
Yeah.
You just created something so beautiful. I love it.
Yeah. And I'm happy to answer any questions. Sarah has a question saying, are these credit requirements for Fuse cards? Are there credit requirements for Fuse cards? So Fuse is currently only offering a prepaid credit card. What this means is that a lot of the time, small business owners don't get access to a credit card. They are declined for a credit card. So then what they end up using is their personal credit card for business expenses. And then they have no clear visibility and CRA questions like, okay, well, is it actually a business expense or is it a personal expense? Because it's on your personal credit card. So the first thing that we're doing for small businesses is we're giving them a payment method that is for their business. And they can use that payment method online for online purchases and start to keep their accounts and their payments separate. So they don't have to spend this time on Sunday trying to separate transactions out of their personal credit card, right? But eventually we do want to offer small business owners micro credits on the credit card that they can use, like a small kind of credit card, $5,000, $3,000 limit. But right now it's a prepaid credit card. It doesn't lock up any money. It's basically a debit card, but with a credit card status. If you know, so it facilitates your purchases online as well.
I have to jump to another meeting, and this
Yes.
is all questions about Fuse Financial. So do you mind if I just jump off and you can keep going with questions
Yeah,
as they've got?
definitely. Definitely.
Okay,
Thank you so
awesome.
much, Lisa.
Thank you.
This
This has
has
been
been
great.
such an enlightening conversation. You're correct. We need to do a deep dive
Yeah, let's
demo.
do it.
I didn't
We'll
think
do
that it
it.
would. Yeah,
That's
definitely. Thank
awesome.
you
And
so much.
thank you guys, all you guys I know that have logged on here. Thanks for logging in and being part of this. This is awesome. Okay,
This,
carry on. Talk
okay,
soon. Bye-bye.
perfect. The other question I have is, Renette, does it connect to credit unions? Yes, so it does connect to credit unions as well as any other major bank accounts. So anything that is part of the credit union network or bank accounts, you can connect them onto our platform. We are not. We are basically bank and credit union agnostic. What we want to do is basically help you run your day-to-day financial operations of your business. What protection for cybersecurity is Fuse? So, Renette, we are partnered with a Schedule One bank, just like any other Schedule One bank. So we use the same security protocols. We have encryption on our databases. We keep your private. All of our partners are PCI compliant, SOC 2 compliant, and we are going to be bringing multi-factor to our platform as well, just so people have. Just so there's added security. So soon you will have multi-factor. Right now we have single factor, but the password requirements ask for like setting up a strong password that has upper and lower case, symbols, letters, characters, things like that. Just to confirm, can you link to multiple banks, RBC and CIBC, to allow for proper PF method, transfer within a branch or between different banks. Yes. So we do connect to different, you can connect to multiple banks, external banks and credit unions, and transfer between your accounts that way. So that functionality is available. Um, the other question I have is from Michelle. I would love to see an in-depth demo of the platform. Absolutely. I think we just did not realize like how much in depth we would go into this. So we're definitely we will set up another demo, and I am happy to. If you have provided us with your email address, send you a personal invitation. You can also set up a personal demo call with me. I'm happy to jump into your business and show you exactly how Fuse Financial can help you manage your day-to-day financial operations. So my email address is aamna.zia at fusefinancial.ca. You can also go on to Fuse Financial website and you can book a demo. You will be booking a demo directly with me, so I can definitely walk you through the platform in depth. Perfect. And if you have any other questions or comments that are coming up, please feel free to email me. I'm happy to answer any question or concerns you have, help you onboard onto the platform, get you set up, make sure that you have zero friction in switching from your existing platforms that you're using to this platform so that there's no learning curve. We designed the platform to have no learning curve. But each person is individual. So I want to make sure that, I can help you set up the right way the first time. So there's no friction, there's no learning curve for you, so you can start using the platform right away. Perfect. Since we are over time, I am going to say goodbye. I know that as a small business owner, I value your time. I'm very grateful that you logged into our live webinar and a demo with Lisa Campbell. I'm going to graciously ask her for some more of her time so we can do an in-depth demo to her network and people that already work with her and her practitioners so they can learn more about Fuse Financial. Thank you so much. Bye.